Hey guys, it's Will. Hopefully everyone's having a good afternoon or evening here. It's Tuesday. We're jumping into some moves we saw play out in AI in data centers as well as over on in space tech today. One of the things that we've been really looking at recently is can we see sustained momentum in the data center market, and we do see some growth recently. So for those of you guys that are just tuning in, my name is Will. We're going to go through some three-part analysis on a few different stocks relative to their markets. It's our map strategy. So we go through three things: the market, number one; number two, the analysis; and number three, the profit margins or the plan that we could put together for the stock. Now, I see some people in the live chat. Thanks, Biggie, for tuning in. Kush, thanks for tuning in. We're going to get right into it. So, the first thing that I really wanted to jump into was this move we saw in APLD. So, yesterday we did a full breakdown on APLD. We had a projection for them that they could potentially make this run up into this $15.50 price point today. And we did, in fact, see that move play out. So you can see right now, they did make this run yesterday. They ended the day right here around 1390. And they ended up making that run up into that 1560, which was a nice continuation of this overall uptrend that we've seen. We're going to talk about what's really contributing to their momentum right now, why they're continuing up. It was a 10% increase today. They started off pretty bullish, had a pullback at market open, then continued up another 12%. And it's great because we just covered them yesterday and they ended up making that move today. And I see Raminder is here. Thanks, Raminder, for tuning in. And then Biggie is looking for Redwire stock. So we'll jump into those. Thanks for tuning in, guys. The data center space is growing fast. And this is something, if there was one company investment that we heard time and time again from even Oracle. Oracle had a really nice day today. They reported their earnings, and we had some targets for Oracle. We were looking for Oracle to potentially get up into this $250 price point in StockMate. Now it's passed, so I feel good sharing with you guys those targets there. Not because we were right or wrong, but because that would take away from some of the value of people in StockMate. But we did have a target here for Oracle, and then Oracle came out with their after hours release today. And Oracle is definitely in the data center spot as well, and in AI markets. And you could see they did end up hitting that $300 price point. So we had a target for them of getting up into a target of $250 to $300, which was a pretty big increase from when we started the analysis. They were at 232, so we essentially projected not a 50% increase, but about a 30% potential increase on Oracle this week in StockMate. And that's exactly what happened. We can also see that the info line continued up. You see that move from about 229 where they were yesterday into that 312 range. So exceeding our price target by another 5% than what we anticipated for their earnings. So really good to see Oracle, come in, and this is why the market most likely sees more momentum today. So we saw Oracle come in with their earnings. They had some layoffs recently, but that they were having strong momentum in AI clouds, in GPU cluster demand, expected to reach 30 billion in annual cloud deals by 2028. And that's exactly what we saw in their post earnings move. So then we had APLD also continue that trend there in the data center space. APLD went up another 12% today as a result of some of the momentum in what they have going on. So one thing we've noticed, they're actually powering some NVIDIA, Dell Technologies, Intel building and constructing the data centers. And you could see that the super microcomputer partnership is one that would mean they're working with big tech on building out some data centers. And one thing to note too about the company, they've seen some deals roll in the billions of dollars. and their market cap is still only about 3.9. Yesterday it was 3.5 when we covered it. Um, but it did make this move and we see it continue up. The thing we're watching lag still is that revenue, but most likely we're going to see that come in positive soon as a result of these billion-dollar deals that we saw them sign in this last quarter. And then the balance sheet is increased tremendously up to about 1.87 billion. And really, it's just a result of the data center momentum. Now, we're not seeing any slowdowns. I know a lot of people, how many of you guys have heard, like, we're at the top, everything is like way overvalued. There's a lot of, I guess, releases and news articles that come out every day, and they say, this is going to be the biggest correction we've ever seen. But really, what we've been saying is, that the value creation is unprecedented. And we're most likely going to see a lot of these companies continue to do well. And that's exactly what we saw with APLD. So now, next level of resistance we see here in the market, they're growing. In the analysis stage, we see they're technically at this 1550 price target right here that we had for yesterday. They reached, so that's their new resistance at 1550. So 1550 is that previous resistance, and also was a previous support back in late August, and they just reached there today. So if they break out above 1550, making higher highs above that level, then we could, of course, see them continue that trend up into that $18, $20 range. That's a 20% increase from here. And then the resistance level, if it does act as a very strong resistance, we've seen about 4 days in a row of market momentum upward from AI and data centers. But if we don't see that continue, let's say that they get rejected, this would be the price point at which they could sell down to. And nearest support level, about 1475. So we did see that $14 price point as a support. But again, you could kind of just take a step back. You got this resistance, support, resistance here that most likely will act as a support there for APLD. So about 1475 is the new support level. If it could break above this 1550 and hold, then that's the new support, and we could see it continue that bull trend up into those highs and continue the overall trend. So hopefully that makes sense. Everybody's got a good deal. With APLD, the past few weeks, we've had some really good trades. It's actually leading our portfolio in the Schwab account. And we're watching it pretty closely here for the continued move. Now, there's a good comment there. Patty O'Dor says, Will, I know nothing about this stock market thingy, but for some reason I've put my life savings into Big Bear. Good or bad? Question mark. I mean, if you know nothing about it, then it's definitely not good, right? You want to have an understanding of the companies. So if you know nothing about it, it can be really risky, right? But owning assets in general is going to be good. We could do an analysis. We plan to do one on Big Bear today, and I would love to do that. We were actually trading them this morning. And I think it just comes down to, like, think about the devaluation of the dollar. Let's say that continues, which it is. We're most likely going to see assets increase in price no matter what. So if you're just getting in the stock market, you're like learning, it's like, can't really, if there's one thing that happens, people lose money, or the economy crashes, inflation hits, and they own barely anything, and it's tough because they have to figure out how to make it work for them. They're like, oh my gosh, my dollars aren't worth anything, and I had all my life savings in dollars. Whereas if you have your money tied to a company, you have your money tied to real estate or tangible businesses, then you are more protected by owning assets. So that's really the core thing that can take a lot of edge and worry off of your mental state when investing. It's like, realize, like, a lot of times owning assets is going to be so much better for your financial security than just holding cash. So I think that part is good. But yeah, fully allocating into one stock and you're still understanding things, that can be pretty risky. So I wouldn't advise that. Let's see. So Carmen says AMPX. This is one you should be talking about. It's getting ready to take off like a rocket, but you always come in late. You'll talk about this when it's $12. Well, Carmen, I don't really have anything for you. I mean, I have no desire to change your mind. But I mean, APLD we started covering around like $3 a share. It's at 15. Most of quantum companies we started covering like Rigetti around $1 a share. QPTS around probably like $4, $8. Rigetti's at 16 right now. IONQ we started covering, I don't know, probably $28. It's at 63. Rocket Lab, I just went to dinner last night with my friend here in LA that works at Rocket Lab. We actually went to the All In Summit here by USC, which is really cool. And Rocket Lab, $3 a share. We were introduced, and now it's a $47 a share. BigBear.ai, for example, that was the one we were just talking about a second ago. We started covering it around $1 a share back in October. I think it's at, what is it at now? $5 a share. So I say that because you say, Will, you're always late. Say, you always come in late, Will. Do I? Because I feel like we're pretty good at finding institutional. We're good at finding some stocks that would be attractive to institutions before the institutions buy. I feel like that's kind of why we have the following that we have, and the value that we provide gets good results for people, right? I mean, Carbon, does that make sense? Callie says, pushing. Yeah, definitely. So we see APLD continue. It's really starting to make that run and continue the uptrend now. It just made a big move of about 12%, along with the Oracle news that we pointed out earlier today. Oracle surpassed our target by about 5%, but Oracle went up 30% this week. And we had a lot of focus on APLD earlier this week. I was super busy today. Ended up looking for my car keys for like 2 hours. My wife and I, it turned out that they were in her clothes. We went for a run and she changed into her running stuff, and then we thought I had the keys, and then we couldn't find it. Anyway, we lost the keys and we were looking for them, so I was really busy. Outside of that, though, we were working on a couple things and looking to get out of LA actually, but we're still in LA. We're gonna leave, but taking time to get out. Ruli says, how much higher do you think AMD will go? Finally, day after day, very bad ones trying to get back to normal. I think AMD is, GPUs and data centers. They're going to see a tremendous run continue in the long term. In the short term, they are facing a downtrend right now. Let's see where AMD's at. They're up after hours, but they have seen a nice recovery today. We were looking for a recovery yesterday on AMD, actually up into 165. Today, they recovered 7% up into about $160 a share. And the nearest support level we see right now for them could be this breakout that they see. It's a support level right now, Ruli. It's right here, this support at about 155. If they can hold that range here, this is a previous support level. That would be great. See them continue to run up. They have a really consistent uptrend. Very clearly had a good day today with the Oracle news that drove most of the AI and data center stocks. So that move was a 7% swing. AMD now looking a little on the overbought side with that move. You see the RSI looking overbought, MACD looking overbought. Nearest support at 155. They're going to look to make and continue this run. I would imagine the run they're trying to make is just really to all-time highs. They're trying to run back up. If we just get rid of all the support and resistance, you could see they're definitely trying to make this move here up into this level, this all-time high level of about $200 plus. So that's about a 23% increase. But good to see they made that first run. I would watch that support at 1550 or 155, excuse me. Let's see. Heavy Hitter says, lock in Carmen and watch all the videos, jackass. Oh, man. No, Carmen, I appreciate you tuning in, and thanks for the insight. But some people don't know. Some people don't know. That's why I tell you, that when you say, Will, it seems like you're always late to the party. It's like, dude, literally, there's like over a dozen stocks we've covered that have surged by well over 100% this year, and our portfolio is up over 100%. I mean, it's a monster year. So I'm like, dude, what's going on? What do you mean? But it's all good. Thanks for tuning in. I actually appreciate it. Okay, so the next stock that we wanted to jump into, right? So AMD was on here. Now, technically, from AMD's perspective, they look a little overbought. They could see a correction maybe at market open tomorrow. We see them sell down a little bit after that big spike. That would make a lot of sense. And maybe that $155 range makes sense. AMD also has really been aggressively building their data centers. They have recently also partnered with Starlink. You can see some of our videos, guys. Thanks so much that we rank there on Google, and you can see some of our videos. Not really necessarily our most popular videos. Some of them only have 1,000 views or so, but have really seen that Starlink is a big catalyst for most companies when they partner. So AMD partnering with Starlink, good deal. AMD has doubled their revenue. They have absolutely crushed. You could see revenue was 9 billion in 2020. They're now up to 25 billion in 2024 and on track to surpass that in 2025. And their revenue is 30% up year over year. Balance sheet is looking really good, so that financials do indicate more growth. However, their valuation currently, their PE ratio is a little bit high, so there is investor sentiment on AMD where while they have good financials and while the balance sheet looks good, the market cap currently, it's still very much buying. Investors are buying into the infrastructure of what is coming. They're buying into the infrastructure of the data centers. They're buying into the infrastructure of the GPUs, of the Starlink partnership, of the, yes, the gaming, but primarily going to be related to AI boom that they're in. AMD also recently, back this summer, acquired this AI software company, Brium, which is kind of putting AMD in a competition really with OpenAI. Brium was a large language model company or a company that was specializing in speeding up large language models and specifically running them on the AMD GPUs. And after demonstrating benchmarks that they were basically processing the comparison of the inference time, so how fast the text and result could be spit out from the AI, ended up being way faster than other companies used by big tech. So AMD went aggressive. They ended up purchasing the company, the software company Brium, most likely in a move to expand their AI and large language model offerings to the marketplace. So AMD, really like to see it. They're up about 3% today and surging after hours as well. And we'll continue to watch as they made that 7% move today. Really, really good to see. So those are kind of the levels to watch. Again, 15 or 155 is the nearest support. And if it can continue, it is going for that 175 to 190. But whatever it does in the near term, you don't really know, right? We could see how the market direction continues. It's been bullish for the last 3-4 days, which is excellent. But in the event that there's volatility in the near term, that's expected. The long term with AMD looks really good. Just from the infrastructure, I mean, it would make sense they're going to be a top player. So Juice Man says, you went balls deep on APLD. Okay, so you invested heavily there on APLD at $14. It's the only stock you own. And you sold your CoreWeave and NVIDIA for APLD. Got it. Okay. Awesome, man. Well, congrats, and thanks for sharing. Yeah, I mean, when it comes to the moves we've seen today, it was really bullish, and that was really nice to see them continue to grow. So we'll be watching them closely, and I hope that the insights that we provide on the channel are helpful for you. Patty says, thank you. Appreciate the info. What I've learned is to sell and diversify. That could be helpful. Small cap semiconductors. Let's take a look. All right. And also, Heavy Hitter Highlight says, is Open Door a rug pull? I haven't covered them because I've felt that while they've had the upside and they have made the upside that we've really went for, they've made that 50% swing we potentially were looking for. They continued up, which is just tremendous. Um, I think that their liabilities are pretty high. So if you go look at their um, it's open stock, not open AI. I'm trying to. It's like pulling up my search results. It's like go check out the API because we're running a lot. And I'll pull up analysis here too on Open Door from Mercatus. So we got open, and what should we do, guys? Should we do Open AI or should we do Grok? Let's do Open AI. It's been really good lately. Let's see what it comes out with. And then when it comes to Open Door, it says there's no current availability. What's going on here? Let's try Grok. What's going on? See how that goes. Open stock, $4.5 billion valuation. They have 1.5 billion in revenue in the quarter, which is like really tremendous for their market cap, obviously. But I think what's happening here and why we've kind of given our distance here is because of the liabilities. The revenue's good, and we could see if that continues. However, their liabilities are getting pretty high, where they only have about 700 million there on the balance sheet, which it could indicate that they're going to see potentially some downward pressure. I mean, unless we see them really continue to grow and um, have an income statement continue the way it is. But right now we saw them pull back from that $7.32 range. They pulled back to 5.43. They are continuing the trend, trying to push back up now into that the all-time high there, up to that $8 range, and continue the overall uptrend. So we do like the uptrend. I would say they're a little bit more on the overbought side from the valuation, but you do have the trend there. And I say the valuation because I know they're bringing in the revenue, but the liabilities are pretty high. That's the only thing that kind of gets me a little bit more hesitant about them. And we see them continue that trend and find the support there around $6 a share. That's their nearest support, and the next resistance level is probably going to be around $7.50, somewhere there. Okay. Okay. Now, when it comes down to BBAI, we had some questions too on BBAI, and I really wanted to cover this one because we we're actually trading this one this morning. It's pushed down to this support and holding this support around 470. We're looking for the recovery here up into $5 a share as it's been consolidating, still facing some downward pressure since those earnings. So what we're really starting to notice here as it's at that $4.80 range is, can it continue? Can it find support and make this move back up into here? It's been consolidating for really what is about 2 weeks now from left to right. And so we're looking for that move to take place. One of the things to note about Big Bear is the backlog. Just had a conversation with someone on the channel who, or I think they were in Stockmates actually. I think they were in Stockmate. And somebody was saying their friend works at Big Bear. And this is always the best because whenever we get the best insights, it's when a friend works at the company, right? And they said their backlog was very large and huge. And I just went through the airport I was flying. Before we came back, we stopped by the All In podcast or All In Summit last night. And then we went to a quantum computing conference this past week, and I flew over to Albuquerque to get an insight into some of those companies. And we ended up seeing this very scan. They scanned my face again at LAX and over at what was it? Denver International Airport. So when we when we see the technology firsthand, that's really good indication that they're continuing to grow as a company. And while the news has maybe not come out with anything big in the last 2 weeks, they have some strategic partnerships that most likely we're going to see the infrastructure pay off. I don't think we should take it lightly, like that their revenue has been only around 30 or 40 million dollars a quarter with that negative net income. I don't think we should take it lightly, but we should also not take lightly how well their balance sheet has increased. Their balance sheet has increased tremendously, just jumping in. You could see balance sheet and backing, they're up to 600 million. And I think that's something people don't realize is not only have they got now deployments at Denver International Airport, Chicago, and Charlotte, you might just consider that those things, whether it's Los Angeles, JFK, Vancouver, or what have you, it's not always easy to get technology deployed at airports in TSA or at the gates. And so it seems that that would be something in the marketplace that they're doing that wouldn't be easily replicable and potentially would be something that would position them well for securing deals. However, when it comes to institutional ownership and things like that, we see increased positions at 198. So we do see increased positions and saw some sells kick in from institutions right around earnings, and then saw them kind of recover after earnings before selling down and finding that pressure and support there at about 14 or 475 for the last 14 days here. So about 475 has been the support, and that's where they bounced down to today. We had a trade going actually, and we ended up just cutting stop right here. Didn't want to overtrade anything. We had some good trades happening with some data center companies, and any shorter term trades we just manage the risk quite with a process, and don't really stretch anything as far as risk. But we did start covering them back around $1 a share, and we have entries at $2.80 on average for our position. So we're still up almost double there, and we're going to continue to watch them. I know that they've pulled down significantly since July, and they could pull down further, and they could continue past this 200-day moving average. But if you do look at their oftentimes the 200-day moving average is going to act as a support. We see them sell down to that support right now, which would indicate that if they're going to bounce, right around this level, around this 475 support, potentially could be where they start to continue some of that market cap build over the next few months. Now, the other comment we hear, is it true BBAI is partnered with Palantir? Yes, that is true, Patty. You could find that on, we could probably go directly to, let's see if we can just go directly to Big Bear. They don't allow me to search on their website. So I don't know if it's going to pull up. Let's see if we can maybe find the direct to source partnership. There it is. Yeah, this is direct from Big Bear. Palantir announcement. They partnered with Palantir, right? Strategic partnership combining their AI-powered products and next-generation operating platform. Specifically, what they're building their products out for is for as they go out to the market. Big Bear has been deploying their VeriScan technology. They have things like customer targeting, sensitive to today's connected economy through inclusion of Big Bear's global data. And you can see Palantir said, we see immense opportunities to deliver more and faster for customers by partnering with cutting edge companies who can leverage the Foundry as infrastructure in their offerings. So Big Bear's unique AI capabilities can achieve scalable distribution across government and commercial customers alike through Apollo and Foundry. So they are partnered with Palantir. Yes, they are. that is something. And I think that happened right around the $160 million contract with Army that they announced last year. So that was right around the same time when they got that partnership with Palantir. It's not necessarily going to, guarantee growth if they partner with Palantir, but it definitely does add more of a, most likely just a value to their customers because, I mean, obviously Palantir has been very successful in creating AI tools for defense, and Big Bear is partnered with the Pentagon and Defense, the Department of Defense. So I think it would make a lot of sense that they're partnered, and so that's something to consider. Not necessarily like a huge catalyst or anything like that, but definitely something to consider as well. Now, I know that it is a little bit late here. It's almost 8:30, but I wanted to give a quick rundown on one other. So we went over some AI for sure, some data centers. What was that one that someone was just mentioning? It was a little bit of a call out towards me, saying AMPX, saying I'm going to miss it. What was it? Was it AMPX? Was that the company? AMPX. All right, let's see if I show the drawings. Ooh. All right, here's our analysis last. We are looking for potential resistance facing at this 783. Okay, so if they do continue their uptrend that they're in right now, we would see them get up into this level around $10 a share, 30%, but they are at a resistance level that they notoriously have been rejected at right around that $7.80 or $8 price point. And so next resistance is there. If they sell down, we're probably seeing them down around $6.30, somewhere in here, if it's more conservative. Apparently, though, the company is doing really cool things. So let's kind of walk through it. What do they got going? Drone manufacturing. Okay, drone manufacturing. They're also working, selected for Amazon Devices Climate Tech Accelerator. Okay, so they have like battery, and I believe from their financial perspective, market cap's at 978 million. Revenues 15 million in the last quarter. Annually, they see it increase. Quarterly, they have seen or net income has gone more negative, but the revenue's up 166% year over year. Balance sheet is increasing up to 121 million, and they recently reduced their liabilities, so their cash and short-term investments are up there. It's not bad. I actually like it. I mean, let's see. The thing is, their cash is pretty low, 120 million. So like, just like if you were to look at, for example, market cap to total assets recorded on their balance sheet, along with their projected income for the year, it would lead us to believe that they're overvalued, because I think those things in total, they come out to around 60 million plus their equity there of about 76, so about $140 million. And their market cap's at $1 billion, give or take, right now, which is pretty high. So, of course, if there's a hype, something like that, we could see them go up. If they secure a massive contract, something like that, we could see them go up. But as of right now, I'm not sure that there would be any sure catalyst that we could identify unless you had something in mind. I know that if we go to investor relations, latest news, drone manufacturing is one. Okay. But not really a dollar amount attached to it. So I'm not is it possible we miss the company? It's possible. Would we rather invest in a company that has at least long term more of a clear financial balance sheet, see the balance sheet a little better, maybe see that they are generating more revenue? Probably. Yeah, that's normally what we lean towards. But as far as, if you've seen, there's a $15 million order that they received earlier this year. That's good. They're at the Needham Growth Conference. That's good. Rigetti was there as well. Quantum computing. All right. 20 million in contracts back in September. Yeah, so they probably have a pretty good consistent revenue coming in. So yeah, it's not bad. It seems like they're continuing to set precedents in their contracts. It just comes down to really continuing to get contracts into 2025 and see where the unique growth opportunity is. Yeah. So right now they're trying to potentially continue this uptrend and make runs up into that $10 range again, but I would expect them to get rejected around that 785, potentially sell back down into this level of about 622. But we don't know. We'll have to see how the market reacts. If sentiment continues to grow and they continue to break above that $8 price point, then yeah, the next target they're probably looking at is around that $10 price point moving forward. But we'll just have to see how they react at this level, because they are pretty dynamic. We've seen some volatility recently, and continuing this uptrend is a little bit more on the higher risk side. You can see the RSI MACD, you can see it looks almost overbought at the moment, kind of pushed up over the last few days, and they're right at that resistance. So just something to consider. Steven says, I'm on the page with you, Patty, for real. Patty says, I genuinely think AI stocks are almost like shooting fish in a barrel. It doesn't matter who you invest in, they will all take over. There's a really good outlook we did a while back. I'll have to do one later this week, where we basically looked at like 90% of companies versus like the 10% of companies that drive the whole S&P. And then same thing with AI, like 90% of AI companies actually are not going to be worth that much. 10%, those 10% that are also making their way into the S&P or becoming the top players are the ones to focus on. So those are the ones we'll most likely have the most the closest focus on. Are the ones that we can identify integrity and real value, and not just hype, and not just what everybody's talking about, but really seeing the contracts, or seeing the product development, or seeing the continued value to the marketplace that could be measured and seen firsthand, versus just what everybody's talking about. Because those are the fish. Those are it's not going to be the same. If you want to have not just people feeding you fish, but have the fishing pole, you're going to want to grab hold of stocks that are of integrity, and that even if you're trading them short term, you like what you're seeing with the financials and with the news and things like that, and that the probabilities are at least in your favor. We don't know who's going to buy and sell tomorrow. I have no idea. The only thing we really know is what generally are the things that would show a good deal that would attract more banks or more institutions, or what generally are the things that increase the value of the stock from a probability standpoint, and stack those probabilities in our favor, essentially. And if we do that, and we do that consistently, along with a plan for each investment, there's really no way that we won't win. It's just a matter of having a plan along with a worthy company. The key word is worthy. It's got to be worthy, because there's so much hype, you can get caught up. The other stock we've been watching closely is CTM. They've continued to make this run. We were actually seeing them at the support level around 95 cents. So far, they're up about 20% in this run that we've been looking for, up into this $1.50 range. They process large amounts of data for the US government, and they have over $100 million contract here in 2025. And their market cap is still sitting, I think it might be 100 million now. Yeah, 106 million. They're making contracts bigger than that of their market cap. And a good instance for rule of thumb is we want to see, increasing revenue, like CTM. We see them increase their revenue, 14 million the last quarter, with not very much negative net income. Their revenue is up 20% year over year. And then the balance sheet, we see them not only increase their assets, the blue here, the assets, but they're also decreasing their liabilities. So cutting their debt, while their cash and their investments are up 500% year over year. So we're going to watch CTM. I have long-term positions in CTM, but we do like to trade them on the short term because while I do urge caution, I wouldn't say buy this because I invested it or buy this because look at the financials. They look so good. They're signing contracts bigger than their market cap. I'm not telling you to buy it. There's no reason for me. I'm not telling you to do that because really I have no agenda at all. But I do think it's important for you to know the difference between like what leads to us finding good companies and not finding good companies. And one of the things is definitely going to be that they're in the right market, and that when we're looking at them reducing debt and continuing to build their contract base, that they are doing that. And so just to disclose, I do have long-term positions there in CTM. Now, CTM stock, while it's made these runs and we'd love to see it, really it's not that $1.45 range. We're actually looking for, I mean, that's what we're focused on right now. But ultimately, we'd like to see something like this, $2.50 range. Institutions, like I urge caution again, because it's only a $100 million company. But institutions haven't touched this stock. Institutional ownership right now sits at about 7% of the total stock. So most stocks are around 40% or 50% owned by banks and institutions, whereas CTM is like 7%. There's not a lot of hype. Like I don't think there was any hype if we go to the articles. Oh, actually, Goldman Sachs came out with a price target apparently for Castellum. Oh no, that's a different Castellum. It's a different stock. It's not this stock. So like literally there's no hype. They're talking about a different stock in the API, which is hilarious. And so I like it. I like how there's not hype. But again, like $100 million company, if there's a $10 million buy or sell, that's 10% swing. So, for us to see it get, like the first time when it spiked to $3, someone said, "Will, isn't that a pump and dump? Look how much it spiked to 283." And I was like, man, that was only like a quarter of a bill. Like that wasn't even much buy volume on that stock. It's just such a small stock. So you got to urge caution. Like we always on the shorter term trades, it's important to have a plan. One thing we were running through this morning when we were trading inside of StockMate is we just went through and one thing we'll do like is we'll say $1 is our purchase price, let's say, and it's like $1.15 and we have, I don't know, 3,000 shares or something. We'll go for the margin for profit and we'll map out the margins, and then it will tell us proportionally where our stop loss would be. If you guys ever want this, I think if I'm not mistaken, if you get on the email list, it's in the first link in the description. It's also in StockMate if you need it. And you can use it as much as you want. Excuse me. I accidentally dropped my phone. So that's why it's important to have a plan, because like ultimately we don't know who's going to buy and sell, and it could move very quick up. I think it has a better chance of going up simply because the institutional ownership is already so small. But hey, we'll see what happens, I guess. How much debt do they have? That's a good question. So CTM stock, who asked that? Michael? Good question, Michael. They just came out with an article earlier. And one of the big things that the CEO announced, and this was one of the things that he really was proud of, was that they raised money for sure, but they also strong, healthy balance sheets. They improved their cash and equity to debt ratio because they reduced their long-term debt to less than $5 million. It's one of the letter from the CEO. And the CEO's name is Glenn Ives, and he was previously in some form of the Navy. And that's part of why I think they got that $100 million Navy contract. But basically, when you look at their assets are at $43 million. They reduced their debt. You can see it's down to just $11 million. So their debt has gone down 32%. So they are not like at risk of like bankruptcy or anything like that, like some other stocks, Wolf stock. Excuse me. Um, so not Wolf WLF, but WOLF. I think it's Wolf Speed. That company was getting really hyped, and they had more liabilities than assets, and I was like, something's weird here, and they ended up going bankrupt. That was crazy. Now they have a lot of contracts and they're working in agentic AI. So the greatest form of AI right now is robotics and agentic AI. So they're working with the US government CTM on agentic AI, kind of similar to the same type of tech. AI, ChatGPT, OpenAI, Grok, things like that are enabled by data centers. That's why we covered them earlier, because that's a really fast growing market. We also could do an analysis here on CTM from the machine. We were using it earlier from Grok and get kind of an outlook. We also have some new widgets we're adding. We got SEC data, which is really going to be powerful. And we got the AI chat there too for whichever model you have selected. In this case, we have Grok selected, which is the XAI company. But yeah, it looks like it's fairly bullish here on CTM. It's looking like CTM is over the next month projected to get up in that $1.20 range. And they had an acquisition lead to increased market share. Some of the other insights include that their revenue growth, they're seeing revenue growth, which they are. And I think over the next 6 months, it's fairly bullish by up to 10%. And analysts are turning favorable on the stock. That seems to be the outlook there with Grok as of now for CTM. So, guys, thanks so much for tuning in. I appreciate you all. We had some good analysis on some stocks in AI and data centers. Quantum companies are definitely a focus right now. They were doing fairly well today. Aviation tech and space tech. And we're a little busy today to be able to push out some uploads, but we were trading live this morning like we do every morning, Monday through Friday. If you'd like to see my entries and my exits every day at market open, it's the second link in the description down below. When you click the link, it will take you to a page that is StockMate, and you can enter your details there. We brought back, by popular demand, lifetime access to the daily live trading. You also get StockMate, which includes the targets for the week, along with Monday through Friday, which companies are reporting earnings, what the targets are, and you get the community of like-minded individuals with over 24 individuals in our group that have a net worth of over 7 figures. So over 24 millionaires in StockMate right now. So it's not just, people talking, but there's some really great insights inside of StockMate. And most of the best stocks actually on the channel come from people in StockMate. So if you're ever looking to join in to the live trading, tune on in. 11 hours from now, it's happening. And I'll even get you a free t-shirt when you join StockMate right now. Send it to you anywhere in the world. We'll be trading tomorrow morning at 6:30 a.m. Appreciate you all. If I earned your thumbs up, hit the like button. Hopefully you guys enjoyed. And I'll see you guys in the next video. Take care.